Hi everybody, I am Mahalakshmi, working as Assistant Professor of Commerce Computer Applications in VV Vanni Perumal College for Women, Virudhunagar. In this video, we are going to discuss exempted amount of capital gain. Already all we know that what is capital gain. Capital gain means the transfer of capital asset. Asset includes all tangible, intangible, movable, immovable, like that. So we can divide capital gain into long-term capital gain and short-term capital gain. If we can use assets more than 36 months, after that we can transfer the assets. The net amount capital gain received from that asset is called long-term capital gain. In case of short-term capital gain, if we transfer the assets less than 36 months, the amount received from that transfer is called as short-term capital gain. So now we are going to see exempted capital gain under section 54, 54B and 54D, 54EC and 54F is the most important exemptions regarding capital gains. So for that I have presented in table form for our easy remembrance. So under section 54, the asset transferred is residential house. This is applicable for all individual and HUF if an asset is used exceeding 24 months, and then the investment of capital gain. So how much we can get, that amount can be utilized for purchasing a new asset. So the new asset may be 1 or 2 residential house. Then in section 54, the whole amount of capital gain, how much we can invested is exempt from tax. And then prescribed period for investment, if it is in purchase of new residential house, within 1 year before or after 2 years. If the new residential house is constructed after 3 years of transfer, and then if there is any amount is not utilized for purchase or construction of new residential house, it must be deposited in capital gain account scheme before due date of furnishing the return of income. Then if the new asset is sold, in the amount already we can get exemption. It must be taxable under short-term capital gain. Then section 54B, the asset which is transferred as a agricultural land, it is also applicable for to individual or HUF, 24 months, investment of capital gain. Then the new asset is purchasing another agricultural land. Then exemption, the whole amount invested from the capital gain. So the period consists of within 2 years after transfer. Here also the unutilized amount treated as the deposit in capital gain account scheme before due date of furnishing the return of income. If the new asset is sold, the amount already get exemption will be treated as short-term capital gain. And section 54D, the asset transferred is land and building for industrial undertaking. it is suitable for all assessee. Here also the asset is held for 24 months. Investment in capital investment made from the capital gain arising from land and building for industrial undertaking. Then the new asset purchase also land and building for industrial undertaking. Then the exemption, capital gain invested, the period in which within the 3 years after transfer. Here also the deposit in the unutilized amount must be deposited in capital gain account scheme before due date of furnishing the return of income. And then if the new asset is sold, the amount already exempted will be treated as a short-term capital gain. Then section 54 EC, the asset transferred will be a long-term capital asset. It is also applicable to all the assessee. The period of holding is 36 months, that is long-term capital asset. Amount investment of capital gain. If the new asset purchased from the transfer of capital gain is utilized for bonds of NHA of India or Rural Electrification Corporation Limited or BFC Limited. Then the maximum exemption amount up to rupees 50 lakhs. It is to be invested within a period of 6 months. So then only it will be treated as exemption, otherwise it will be fully taxable. If the new asset purchase is, it will be sold, it will be treated as long-term capital gain. And then last exemption, section 54F, any asset other than residential house. So here we can transfer any other asset other than the residential house. It is also applicable to individual or HUF. So these are holding period is 36 months because long-term capital asset. Here the investment is net consideration. So if there is any expenses you have to meet at the time of selling the goods, that can be deducted from the sales. It is called as net consideration. And from the transfer we have to bought one new residential house. Then the exemption, proportionate net consideration invested, that is we have to use one formula for calculating the exemption amount, capital gain into cost of new house divided by net sale consideration. It is the exempted amount under section 54F. So here also we can treat if the residential house is purchased before 1 year or after 2 years the transfer. If it is constructed after 3 years from the date of transfer. If the treatment of unutilized amount, it be deposited in capital gain scheme before due date of furnishing the return of income. If the new residential house is sold, the amount already get exempted will be treated as short-term capital gain and liable to pay tax. So these are all the important exempted capital gains under these 5 sections: 54, 54B, 54D, 54EC, and then 54F. So if you remember this theory while doing capital gain problem, you can do the problem correctly. So I hope all you understand how we can find out the exempted capital gain in other different sections. Thank you.